At some point in our lives, we all take on debt for a car, for a house, or simply to make life a little more comfortable. And usually we think like this: I borrowed money from the bank. I have to pay it back. That's actually true, but it's incomplete. Because there's another side to this. From the bank's perspective, what you call debt is their profit. This sentence may sound simple, but it's very important, because this is where we start to understand the system. In the past, money wasn't like it is today. In the early 1900s, money had real value behind it. Gold. You could take your paper money and exchange it for gold. In other words, money represented something real. But over time, that system changed. In 1913, the Federal Reserve was established in the United States. This event marked the beginning of modern banking, and the role of banks changed. They were no longer just places that stored money. They became an active part of the financial system. Now let's move to today. Imagine you're taking a loan from a bank. Most people think, the bank gave me its own money. But the reality is different. Banks create most of the money they lend within the system itself. So when you take on debt, new money is created. That's why there's an interesting dynamic in the economy. As debt increases, money increases, and as money increases, the system grows. So in reality, debt is not just personal. It's what keeps the entire system running. But here's where it gets critical: interest. The bank doesn't just give you money. In exchange for time, it asks for more. Let's say you borrow $1 million. Over the years, you might pay back $1.5 million, maybe even $3 million. That difference is one of the bank's main profit channels, and that profit continues as long as you keep paying. This system doesn't only apply to individuals. Governments borrow money. Countries pay interest. Today, almost every country in the world is in debt, and that debt has become a normal part of the economy. In 2008, the world entered a major financial crisis. People lost their homes. Some lost their jobs. One of the main reasons was uncontrolled lending. People were given loans they couldn't repay. The system expanded, but it wasn't sustainable, and eventually it collapsed. But here's the interesting part. Banks didn't disappear. Governments stepped in and saved the system because the system depends on banks. And today the same cycle continues. We work, we earn, we borrow, we pay, and then we start all again. But there's something you need to understand. This system is built on debt, and we are inside that system. Now think about this. If you paid off your debt, what would really change for the system? Not much, but if everyone paid off their debt at the same time, that's when the system would collapse, because this system runs on our debt. And maybe the real issue isn't taking on debt, but understanding what kind of system that debt belongs to. Because if you don't understand the system you're in, you can't take control.